Welcome to Thriller Premium. Welcome to Thriller Premium. In-depth coverage and timely analysis of macro and micro happenings in crypto.
Welcome to Thriller Insider.
Hello, ladies and gentlemen, boys and girls from around the world. Welcome back to another exciting episode of Thriller Insider. Today is August 12th, 2019, and today we are talking Bitcoin ETFs. That's right. And so all we're talking about today is the Bitcoin ETF. We're going to talk about what was announced today from the SEC. We're also going to get into what an ETF is, right? And how this will affect Bitcoin long term and why it's needed in the space and what was leading up to it. So first off, let's talk about what an ETF is, right? So in short, an ETF is a type of investment fund that is tied to the price of an underlying asset, a commodity, an index. They're also tied to bonds or a basket of assets. Like an index fund, it is traded on exchanges, available to both retail and institutional investors. But a Bitcoin ETF in turn would track BTC as the underlying asset. So it is indeed an indirect way of purchasing Bitcoin where the investor only holds the corresponding security without having to store the actual coins. So this helps a lot of older people that aren't able to understand this technology or even able to comprehend other than the price goes up, right? So if listed on a regulated United States exchange, an ETF could pave the way for large institutional investors and hence push Bitcoin and cryptocurrencies in general toward a broader recognition by the entire investment space there in Wall Street. So that's why we have VanEck, that's why we have the investment firm VanEck and a blockchain development company, SolidX. They've been trying to achieve this ETF for over a year now. A lot of people think that is going to be the first ETF that gets approved. The next one that we have here is the Bitwise Asset Management with NYSE ARCA. That was published on the Federal Register on February 15th, kicking off that 45-day clock, and then in total a 240-day approve, reject, or straight up denied. So we have those two, right? And then we have the ETF backed by Bitcoin and T-bills one, and that's the Wilshire Phoenix and NYSE ARCA. That's hoping to offer shares in the United States Bitcoin and Treasury Investment Trust. So the fund manager would oversee the trust investing exclusively in Bitcoin and short-term U.S. Treasury securities. So we have all those working right now. We had a decision today, but before we get into that decision, let's play something to get you to understand exactly how this ETF works. Okay.
Let me just pivot a little bit and ask you about Bitcoin ETF.
ETF sales are hitting record highs again.
The SEC has once again denied several proposals for a Bitcoin ETF.
Every time we hear about Bitcoin ETFs in the news, we see a reaction in the market. Recently, an April Fool's Day joke about the SEC approving a Bitcoin ETF was cited as a possible reason for the huge price spike. So, why are ETFs so important to the crypto market? Well, Bitcoin was originally designed to be an alternative to the traditional financial markets. Today, Bitcoin actually needs those financial giants. And in turn, Wall Street is eyeing crypto as a potential golden goose and want to get in on the action. And this is how Bitcoin ETFs might help them.
Institutions are out there to make money too, and if they see a way to make money, they're going to go look for a way to participate in those markets.
This is Hester Peirce, aka Crypto Mom, a commissioner at the SEC and an outspoken advocate for Bitcoin. She agreed to speak with us about her personal attitude toward a Bitcoin ETF, but not necessarily the views of the commission as a whole.
I think you've seen real interest from institutional investors at looking at this asset class and saying, hey, this is an asset class that allows us to diversify our portfolios more. And so they want to have a way to invest in this asset class.
Okay, so let's get into the pros and cons of a Bitcoin ETF. This is very important to understand. First, as an investment structure, the pro is that this alleviates barriers such as logistics of buying, selling the underlying asset, and it solves custodial considerations because asset managers and people that are speculating or people that want exposure to this digital asset class, they can't self-custody on behalf of their clients, the ones that they serve. So some investment structures already invest in Bitcoin. We know that as a fact, as we've been watching it throughout the couple of years. But they are only available to accredited investors, people that have a net worth of over a certain amount. A Bitcoin ETF would ensure fair access, since all types of investors could invest in. If a high net worth person can invest 1% of his portfolio in it, why can't somebody else who's a regular person do it for retirement? And secondly, from a portfolio construction point of view, Bitcoin can be used as a trading tool to generate alpha, or as a portfolio divester would say to asset allocators in search of low correlation to traditional assets. So to appreciate Bitcoin for its uniqueness and asymmetric risk payoff profile, it first must be understood that it can be viewed as an option on digital gold. I mean, that's what we're talking about here. This is how they want to view it as, and therefore as a flight to quality asset in certain market conditions, which will lead us to our next topic here in a second. But let me keep going here. So investment professionals are best qualified at handling questions pertaining to the sustainability or the subtlety of investment in context of the overall financial portrait of the end investor. So since investment dealers already deal with KYC and AML considerations, investors would not need to go through the process all over again. It would just become another provider for that digital asset. Now, the case against a Bitcoin ETF is, you'll hear that all over crypto Twitter, right? So there's a lot of people that just do not want a Bitcoin ETF. They think it's going to, kill crypto. It's going to kill Bitcoin, and they all have their point. I think vast majority of people need to understand that this is going to happen. Just the amount of research that we did today, it looks like, well, we'll get into that a little bit later, but let me just explain the case against it. So Bitcoin is a digital bearer instrument, right? It's decentralized network. So you have the trappings for these people, these investors, to fund structured limits in its usability, as it's almost because we haven't built the guardrails yet for, paying with Bitcoin. I mean, we have, if you know what to do, but the vast majority of this network is basically peer-to-peer in nature, and the vast majority of it is sitting on a wallet somewhere. We really haven't taken it upon ourselves to really start paying with Bitcoin on like an everyday basis. I mean, don't get me wrong, we made a lot of good strides this year to do it, but this is what the case against for Bitcoin is. And special considerations must be taken for audit, custody, and insurance, because such investment funds represent honeypots, especially when it comes to Bitcoin. They attract hackers. So furthermore, securities lending and fork policies must also receive heightened scrutiny as well, because say if you have different forks that happens to be, that happens to go on, on Bitcoin, how do you deal with forks, with a fork policy? Like, let's say somebody else comes out and they want to make a Bitcoin forever, right? Like, how does that work with custodies? So they still have to get this due diligence kind of up to speed. And so it's just not ready yet, right, for stuff like that. But in the end, a Bitcoin ETF is not fundamentally required because everybody can buy Bitcoin right now. Coinbase has a vast amount of United States users out there, and it's very likely that a lot of people have already started investing in Bitcoin through Coinbase, but we don't have that investor, that $1 million investor out there investing in Bitcoin. So what I am looking at here is from a retail perspective, because that's what we are. We're retail. So from a retail point of view, the question then becomes, how will this, affect me? Like, how does this affect you? How does it affect me? Ultimately, we're kind of caught in this conundrum because in one way, this will help Bitcoin get solidified as a digital store of value, as digital gold, right? At least that's how they'll see it. That's how Wall Street will see it. But it will also give us the accountability when it comes to structure, and it comes to regulation, and it comes to custodianship, and it comes to even probably, price and volatility. It could probably help out with that too as well over time, that is. But this is kind of where we're at. This is exactly where we're at right now. And so I want to play something, and this is from Matt Hogan. He is the CEO of Bitwise Investments, and he is looking to create that next ETF. This guy provides a ton of knowledge. If you follow him on Twitter, I've been following him for quite some time now, and he just drops amazing information out there for free. And his insight into why this ETF is important for Bitcoin is pretty profound. Take a listen.
I had the good fortune of being involved in the ETF industry from its infancy to today when it's a $4+ trillion market. I was excited about a technology that had the potential to transform a big part of the financial universe. So when I was looking around for my next big thing, I wanted to find a similar situation, a technology that was new and exciting, potentially had broad or massive possibilities of influencing the world, but where all the problems weren't solved. Crypto is that. Crypto is the most exciting area of finance right now. It has massive unsolved problems, and now I'm digging in and trying to figure it out a bit.
So why is it the most exciting kind of development in finance right now? Because for outsiders such as myself, it looks like this kind of just wildly speculative, the Wild West, and that it could, it and many other technologies could possibly be the next big thing, but it's just
it seems insane, right? Like we could be sitting here in 2 years and be like, digital money. How did anyone think that was a thing? I totally get that. Why is it the most important thing? In the end, the funny thing about cryptocurrency, and people get all excited, there's these celebrities and overhype. In the end, it's all about accounting. It's actually a better way of doing accounting. But it turns out that accounting and ledger keeping is hugely important. Our entire financial economy is built on that. Our entire democracy is built on that. We rely on accounting and ledger keeping for everything that we do. What crypto does is it eliminates the need for a middleman when keeping track of accounts. And when you think about the reason I said it's the most important, most exciting things, that middleman extracts an enormous amount of value, right? If I'm sending money overseas, international remittances, that middleman is taking out 8% of what I'm sending abroad. So people who are working in the States, they literally work 1 month out of 12 for Western Union to send that money abroad. Cryptocurrency has the ability to eliminate that. And this disintermediation can happen in multiple sleeves of the financial industry, in healthcare, in food, in trade. It has opportunities that measure in the multi-trillion dollars in terms of the efficiency it can bring to the economy. That's why it's so exciting.
But why do we need a cryptocurrency? I mean, why, for instance, can't the banking system get more efficient, and instead of, clearing a check in a day or two, I mean, can't they develop software among themselves that they know the money's good in X bank, and if I transfer it to Y bank, that they can recognize it right away?
Yeah, I totally agree with that. Theoretically, they could. The problem is that position of middleman is a position of rent-seeking power. Right? When you think about wiring that money to, let's say, Africa, what happens is I tell my bank to wire it. They find a U.S. bank like Bank of America with a relationship overseas. My money goes to Bank of America. Maybe it goes to Deutsche Bank. They translate it into euros. Then it goes to a bank in South Africa. Then it goes to another bank. That's how the wiring process works. It's like a daisy chain. Each person in that node has the ability and therefore the tendency to take a fee and a slice for their services. So could they theoretically make that more efficient? Yes. But what cryptocurrencies do is it doesn't make that marginally more efficient. It allows me to send money to that person in Africa today directly with effectively no middleman. It's the ultimate solution to that. So could they get inchwise closer? Yes, if they could overcome their tendency to seek rents as a middleman. But history would suggest that they're not going to do that. So why not just cut it out entirely, make it permissionless, make it direct peer-to-peer, and eliminate that huge portion of fees that's getting sucked out by the financial industry today?
I understand the appeal of that, but let me ask you about the ETF transition, where you're saying that you recognized, you were an early adopter of ETFs. You understood the characteristics that you thought would be transformative for individual investors. It certainly has been. What are the qualities that you saw in ETFs that you are seeing in cryptocurrencies?
Well, I'll say two things, right? So one is a sort of community quality. If you go back 15 years ago, most of the big banks, most of the big active mutual fund managers dismissed ETFs as risky, uncertain, and likely to fail, right? And I think if you asked JP Morgan or American Funds or any other major financial institution, do they wish they had jumped onto ETFs 15 years ago? They would have said, of course, right? One of the biggest mistrades in the history of investing. Today, you have large major financial institutions like JP Morgan and Goldman Sachs, et cetera, talking about Bitcoin and other cryptocurrencies as a risk and a fad and potentially doomed to failure. I think if you fast forward, there's a chance that the same thing will be true, that they'll wish they had jumped on board. When you asked about what makes them similar, it's actually disintermediation. So ETFs are cheaper than mutual funds for lots of reasons, but the primary reason, honestly, the biggest chunk of fees that they cut out was when you used to buy a mutual fund, it would list on, say, Schwab's OneSource. And the mutual fund would have to pay Schwab 35 basis points for that listing. Schwab was an intermediary between you as an investor and your ability to invest in that fund. What an ETF did is said, let's put that on exchange, eliminate the middleman, you can buy it directly and save those 35 basis points. It's just eliminating a middleman. The same thing is actually true in cryptocurrencies. So if you think about the arc of finance over the last 50 years and the next 50 years, it's been a constant process of disintermediation. That's what ETFs are about. That's what robo-advisors are about. Crypto's actually about the exact same thing. It's about eliminating the rent-seeking middleman through technology, and that's why I think they're similar in some ways, and that's why I think long-term they'll be very important and succeed. Huge volatility in between, lots of risk and speculation, but long-term, it's a force towards disintermediation and efficiency, and those tend to win out.
I get that, but I also see some huge differences between cryptocurrencies and ETFs, and I'm thinking that, the value of an ETF is based on the securities that, that make up that fund, that the index that it's based on, whereas with cryptocurrencies, there's no, it's not based on any tangible assets at any rate, or something that is trading on an exchange, or that we understand, like gold, or stocks or bonds or any currencies that are issued by governments and regulated by governments. So that's a huge difference, because we're talking about something on software. It's
very completely true. So there are big differences between ETFs and crypto.
So what she brought up there is exactly right. And this is why we've seen a cleanup when it comes to regulatory action. The SEC has subpoenaed and charged a dozen of bad actors, a massive cleanup, and is now in constant dialogue with good actors in the space. As a result of the enforcement and monitoring, the DEA itself has come out and said that criminal activity is no longer the main or significant use of crypto. You have the CFTC, FinCEN, the NYDFS, and FINRA have all been actively licensing and overseeing the space for more than a year. And the IRS has also provided and enforced a clear tax treatment since 2014. So, beyond regulation, the industry is awash with not just capable new firms and human capital, but reputable mainstay counterparties in almost every category, from Fidelity to New York Stock Exchange to CME, to Susquehanna, to Jane Street, to Cohen & Company, to Deloitte Tax and PwC. This is all to say that the government spotlight is arriving at an incredibly opportune time with what happened with Facebook and how the Senate and the House were talking about cryptocurrency and pretty much shining a light on bad behavior and why Facebook couldn't be trusted and why Bitcoin could. And this is all in really good news for a Bitcoin ETF. If we look further down, we also know that when it comes to monetary policy and what we've discussed with President Trump and the China trade and tariffs and currency wars, this ETF, not just Bitcoin, but ETFs in general, have currently as of 2017, it's a $4 trillion market. By 2022, there are people that have researched that it's going to be a $10 trillion market. There's room in there for Bitcoin to receive vast majority of those trillions, if not at least one. So this new paradigm of currency devaluation is happening. And even Ray Dalio has come out and said that he believes cash and bonds will not be reliable stores of value anymore. Historically, in periods of inflation and currency devaluation, scarce real assets such as real estate, gold, commodities, and we point out Bitcoin, right, are safe havens for wealth and a source of returns. But Ray Dalio has said that his big recommendation is to buy gold, which is not surprising. That's because we know it has been established long before as a non-sovereign store of value, which directly lines up with Bitcoin, because you have the U.S. Federal Reserve Chairman himself, Powell, referred to it as digital gold, but still a speculative store of value. So there's an abundance amount of just bullish information that is on the backs of the SEC right now to get this approved. So now let's take a look at the VanEck ETF. So I want you to listen to Gabor Gurbax. He is probably one of the most knowledgeable people when it comes to ETF, and he gives it out freely out there on Twitter, and he educates the vast majority of us of what's going on behind the scenes. Take a listen.
We must ask, obviously, what is the current status of the Bitcoin ETF? How's it going?
Yeah, so as you know, we've been actively working with Soldex to bring to market physical Bitcoin ETF that's insured and sort of works as a regular ETF. We've been at it for a while and sort of trying to get this approved. Right now, it's under consideration, so we're going back and forth with the regulators on responses. The last time that it could be approved is mid fall, so we have some time to work out a few outstanding questions for the fund.
What do you think the chances of a Bitcoin ETF being pushed through are? What are the chances?
Yeah, it's a good question, right? It's like the $1 billion question or more. If you ask me, I can't directly speak to a filing that is actively in registration. I think the approval of a Bitcoin ETF is serving the public interest, and I sort of tweeted this. If you want to follow me on Twitter, it's at my name, which is at Gabor Gurbax. I tweeted that there's liquidity benefits, there's custody benefits, there's regulatory and tax benefits of having an ETF to market. So I think it's the regulator's best interest to eventually approve the ETF. I don't know when. I just know that right now, investors' best option is to go often offshore into unprotected platforms. So we are committed to drive the process to change that and offer safer investment solutions to investors.
Incredible. Does the regulatory uncertainty within the crypto markets concern you? Do you think it's an easy problem to fix? Obviously, that's the problem with the SEC. That's their issue. Do you think it is a problem and a concern?
I don't think so. It's just a new market. There are certain things in place like pricing, custody, and tools to make sure that the markets are not manipulated. We have solved the pricing problem with MBIS, or VanEck's wholly owned subsidiary, so we think we have right pricing solutions. I think the right custody solutions are coming. The structure that we have in place we think is appropriate. With respect to market manipulations, we have worked with spot trading platforms or crypto exchanges and put some surveillance on some of those platforms. So right now the number of surveilled exchanges is growing. So I think we have all the answers to basically the questions that regulators have. And so again, I don't know about the outcome, but I'm always trying to do the right thing to build a decent market. Yeah.
Absolutely. And if a Bitcoin ETF got pushed through, say yours, do you think it might have a similar effect as it did on gold's ETF?
Well, no one knows. I mean, obviously, sort of institutions. An ETF has the potential to attract institutions and participants that cannot be in this market today for regulatory reasons. So I think there is some kind of impact there, but I think the most important thing is accepting Bitcoin into the mainstream financial system, and knowing that it's not really the price impact that matters, but the fact that the asset is alive and accepted to the institutional system. So I think our focus should be more like, what are the ways in which we can enable Bitcoin usage sort of across the board, because right now people already have options to buy Bitcoins on exchanges, over the counter, mine it in a bunch of ways. So it's just kind of weird that you can't put it in a fund. Coinbase has more customers than one of the largest brokerage firm in the United States. If that's not telling, then what is, right?
Kind of coming back to that idea, does Bitcoin really need an ETF? What's your ideas on that?
No, Bitcoin doesn't need an ETF. I'm a Bitcoin fan, and I think Bitcoin is in itself is a really interesting technology, and similarly, gold didn't need an ETF to exist for 5,000 to 7,000 years, but I think in order to make the process of an ETF has unique benefits. For instance, liquidity through the secondary market or the authorized participant market, proper tax documents, which are kind of a pain today to manage, and there's sort of like reinvestments, tax-free type of reinvestments at the end of the year. Basically, reinvestments from forks and blockchain-based corporate actions are tax advantage in an ETF form. And it's for mom and pop, it might be inappropriate to hold their own keys, and they don't know. And 95% of people don't know how to hold their keys, so it's just an easier vehicle to provide access to Bitcoin itself. Eventually, I think the financial system will be enriched by the unique qualities of what Bitcoin brings, like key management and owning your own keys and having the right to your own assets. It's just we need to. What I like to say is we need to walk before we run, and an ETF is walking before we would run to a completely new world. Yeah,
that's an interesting way of putting it. And do you think? I mean, obviously there was a huge hype around the ETF and ETF back in 2018. Do you think it's overhyped now?
I don't know how to answer that question. I think we get more and more questions about sort of why the ETF doesn't exist, and I'm like, well, it's not on us, it's the regulator's job. Normally an ETF is approved or disapproved within 240 days, and well in that, a lot of the standard ETFs gets approved before. I mean, it's a uniquely complex area, and so I guess it's different. I love the fact that people learn about exchange traded funds in crypto, and the young generation about investment vehicles. Like, people didn't talk about exchange traded funds, how they're taxed, how the liquidity of markets, and what a market maker is before talking about like an ETF and crypto. So the educational aspect of it is really valuable. I mean, everything is overhyped in crypto, so like in ETF, it's not an exception. I love the structural developments that come with it, like the right pricing indices with MVIS and Crypto Compare, the conference organizer. They're a unique reason. They exist to help ETFs and financial firms to benchmark different digital assets. So that's one practical result. This comes from the quest to get an ETF to market, and custody solutions come out, surveillance tool, better trading engine. These are all benefiting the entire market because the ETF has such a high standard for everything that everyone needs to grow up. And I think while the existence of ETF is often overhyped, the benefits that come from it and structural developments are actually really useful.
Right. So let's get into what was announced today and ultimately the Bitcoin ETF getting delayed yet again. It was announced today that the Bitcoin ETF was going to get delayed till October. That's right. If we look at the news that was cited here today, the ETF proposed earlier this year by asset managers Bitwise Asset Management, VanEck, SolidX, and Wilshire Phoenix, and filed with exchanges NYSE, ARCA, and CBOE BZX, are all seeking to become the first such investment vehicle based on Bitcoin. The filings were published in the Federal Register in February and June, kicking off the legally mandated 240-day clock on a final decision. Final decisions on the Bitwise and the VanEck SolidX proposals are expected by October 13th and October 18th, respectively. The next decision on the Wilshire Phoenix proposal is scheduled to occur by September 29th. As we know, a number of companies have proposed Bitcoin ETFs in recent years, and the regulatory agency, the SEC that is, has yet to approve. And, I took a look at the SEC paper because that's what I do. And so what kind of surprised me was this first one, the Phoenix ETF. This one was kind of surprising. There's only has been 6 comment letters. So I don't know if you remember, but maybe about a month ago, the SEC opened up. They wanted to open up a dialogue with the space. They wanted people to, send letters in so they can read over them and they could, use that to kind of understand why they should, allow this ETF to go through. The Wilshire Phoenix one has only received 6 comment letters on the proposed rule change. But if you look over here at the other 2, so for example, the Bitwise ETF, if we look at that one, this was kind of interesting. The Bitwise ETF has received a total of 50 comment letters on the proposed rule change. So that's 50 individual letters sent to the SEC telling them to approve or not approve the ETF. And then if you look at the Van Eck one, this was interesting too. So this one has received 38 comment letters on the proposed rule change. So as of right now, everything these 2, the Van Eck and the Bitwise one, are getting pushed back until October 18, 2019. And that would be a total of 240 days from the date they initially had applied. So overall, this is really good news. I know a lot of people were hoping for an ETF today, but frankly, it's just not ready yet. And let me preface this with saying that, I don't know anything, but if I can speculate here, I would say the SEC and the CFTC and the rest of those regulatory agencies want to make sure that they kind of push their foot down a little bit more. And the fact that the CFTC is going after BitMEX right now is kind of them putting their foot down a little more. And then the fact that the New York Attorney General's office is going after Tether right now is them kind of putting their foot down a little more. I also think that the SEC is reluctantly holding out for BACT and for them to launch. I really think they want somebody that can manage the Bitcoin order book and kind of pull it away from BitMEX. I really think that's what's really going on. Again, this is just pure speculation, but ultimately, I would say if it doesn't get approved in October, then we probably won't see a Bitcoin ETF until the following year. By then. I would imagine that either Bitcoin would have already ran up or that would lead to the next big run up after the halving. So either way, I'm going to be looking at October. October is the next date that I'm looking at here in crypto and seeing how the markets are going to sway. There is another Bitcoin ETF here in September. We'll monitor that. I don't think the Phoenix one has any chance of going through, to be honest with you. So if that gets denied, I would not be surprised. But I'm looking to the October one. If, like I said, if it gets approved, I can see us having a really good winter. If it doesn't, then I want to see how that's going to affect the market. Let's find out. But at that point, people are going to resubmit. It's going to happen again, right? You're going to have this whole process all over again. And so I would say a Bitcoin ETF at that point wouldn't happen until after the halving, which would be after May. So at that point, this could be the next big catalyst, the ETF, but it is going to be a big catalyst long term, just because of the ETF market and how much it's expected to grow here in the short 5-year term, right? So I think that's all I got. I think we covered everything here on the Bitcoin ETF Insider. And if you guys have any questions, feel free to shoot them in the comments or send me an email. All right. What a time to be alive. Like, seriously, we are such in a good spot right now as far as making our, kind of way into this next revolution that is going to be digital currency. The true, deep, big picture questions are about the nature of money and why Bitcoin is a better sound of money. These are debates worth having, and in future terms, in the future, this is going to have the most immediate impact. And ultimately, if you're human and you're living on Earth right now and you have some Bitcoin that you're holding here the long term, you're going to be a lot better off in the future than you would if you didn't have it. So I strongly urge you out there to let everybody know, that it's your family, your friends, that they need to buy some Bitcoin. They don't want to miss something that's once in a lifetime. See you tomorrow.